There have been a big sell-off pushing Palantir stock to decline. However, what does the mainstream media thinks about that? Thank you investor friends for clicking on this video. Today we're gonna be looking and commenting on an interview on CNBC that aired last week. Quick break guys, just wanted to let you know that this video was intended to be uploaded on Sunday before the quick rise and jump in price. Nevertheless, I am sure you will get some great knowledge out of this. Let's get back into it.
Shares of Palantir, they're getting pummeled in today's trade, down about 14% after Morgan Stanley downgraded the stock to underweight for what it sees as an overextended valuation. The firm noting that the data and software play is up triple digits since its late September IPO with very little change in the fundamental story.
So as we talked about it last week, Morgan Stanley downgraded PLTR and Citron's Research took a short position. You can find both of my videos down in the description with what exactly they did say and my thoughts.
Your Trading Nation team today is John Petrides of Tocqueville Asset Management and Danielle Shay of Simpler Trading. John, let me start with you. This is a company, Palantir. I always want to call it Palantir fasciitis for some reason, but be that as it may. What do you think about this company, and does it have to grow into its valuation to really justify its price, or is this sell-off an opportunity to snap in and snap up some shares that might pay off down the road?
That's a great question, suggesting that Palantir stock earlier on Monday could be seen by many as overvalued, but I don't think so in my own opinion. And that with this drop these past couple of days, an opportunity could arise.
Yeah, thanks, Tyler. Well, in my opinion, I'm not attracted to the stock at current valuation. I mean, it's trading at about 33 times, not next year's sales, 2022 price to sales, which is extreme valuation. It's trading at a massive premium to other, software as a service type of companies.
Just pausing the video, guys, for a second, because John doesn't seem to be knowing what the hell he is talking about. He's just throwing big numbers, large claims, and comparing Palantir to other software companies. But Palantir has nothing to do with other companies, since more than 50% of its contracts are with the US government, and he doesn't even give examples of competitors. Even though Palantir has no real competitors, I have talked on this topic in my previous video about Palantir's competitive advantages. A company that could be considered as a competitor is Snowflake, that is trading at 100 times price to sales and not 30 times like Palantir. Hence, investors see a huge opportunity of 3xing their investments.
And this is, to me, the prototypical stock of 2020, that it's going to perform well. IPO'd earlier in the year. It's a growthy tech company that has a lot of momentum behind it, and that pushed the stock higher.
That is simply not true. Alex Corp took the company public after many years, not to raise capital, since they have $1.8 billion in the bank. They went public to increase liquidity and for early investors in the company to take profit.
If you like the stock, well, then this sell-off today is a gift. If you don't like the stock, you want to wait for a bigger sell-off.
Let me correct him. If you like the stock, the sell-off is a gift. However, the sell-off shouldn't change your mind, because you have to like and invest in the company based on the fundamentals and not the stock price.
And of course, they have government contracts that, the bull case is that they have government contracts that are sticky, but I think that's already priced in the stock when you're trading it.
I agree with John that the government contracts are priced in the stock price. But you know what is not priced? The big commercial market, where big opportunities lies for Palantir to make millions, since the large fixed cost of the platform is already paid and the low cost is associated with deploying it countless times. This, my investor friends, is economies of scale.
2x your peer group.
So for you, growthy but frothy, Danielle, I sense that you like it, but you like it in different kinds of ways, including the opportunity to trade some options around volatility in this stock.
So Danielle Shay is an expert in options and doesn't usually buy and hold.
Yes, that's absolutely correct. So for me, the Morgan Stanley downgrade, this For me, it's just a little bit short-sighted, honestly. I mean, I'm looking at this as a 5 to 10 year play as far as just buying and holding the stock. This company, it's a leader in the data analysis space as well as AI. And yes, they have government contracts and they've had those contracts for a while, but they're completely ignoring the fact that this company is expanding into the private space. And there are so many applications for this software that they haven't even done yet.
Bravo, Danielle. So she's sure that Palantir is a leader in data mining. She's looking at the stock long-term, 5 to 10 years, which she doesn't usually do.
And, on one hand, I love the stock, but for me, I love it even more in the options market. Because of the amount of speculation that we've seen in this stock, the options premiums are really high.
Then she goes on by talking about the options market that I don't engage in, because volatility is very high and the stock price cannot be predicted with certainty, preferring to buy and hold for the long term. Thank you guys for watching this quick video. Please like and subscribe to the channel. See you.